Friends, in this video for ithought Advisor, I'm going to talk to you on the topic maximizing from market corrections. We are seeing a concerted correction in the market right from the beginning of this year. We are seeing this correction spread and we are seeing its impact more in the expensive parts of the market. Companies which don't make profit but which were much fancied. Companies which made one-time historic profits and which got a very high discounting. Companies in themes which were much fancied and connected to the pandemic in more ways than one. Businesses where scarcity of shares led to excessive valuations. All these areas are seeing a sharp cut. While these areas see a sharp cut, it's not as if the stocks which we think are value stocks, where the valuations don't factor in much of the positives, won't come down. When the markets fall, all stocks tend to come down. Even the stocks which did not participate in a rise may participate in a fall. So, in a broad correction like we are seeing now, we have to be very specific in our observations. We have to take stock of why companies have lost valuations, and we have to understand which are these companies where the loss of valuations will probably not last for too long. Needless to say, we have entered this year with portfolios which are very definitive. If you are an individual investor, you have a lineup of stocks which you have built hoping they will do well this year. So you need to now adapt to what is happening in the market, or you can wait it out. This is a very personal choice, but I would just say one thing. If you have bought too much of businesses which did well last year and you have paid too much for it, then you need to look closely at every decision you have made and understand if the companies will again go back to a growth mode anytime soon, whether they would be able to regain those profit margins which we saw last year, and whether the valuations prevailing now will justify the new emerging reality. Once you're done with that assessment, then you will have your answers of what you need to do with individual investment decisions. So that is your responsibility. Now let me tell you what we do as advisors or managers, whatever roles we play. Firstly, we believe that we need to identify parts of the market where we are seeing a sharp cut, we are seeing valuations which were already in our favor become even more attractive, and we need to ensure that our investors participate. This is not easy because when markets fall, investors bring out the weighing scales and the measuring tapes. So when things turn bad, everybody wants to understand whether they have done well, whether the advice has worked well, and whether they are in a good wicket. But that, in my opinion, is something they should have done in the good times. When the markets turn for the worse, you actually need not be so obsessed about measurement then. Instead, you look at what are the incremental opportunities that we are bringing to you. It is our job to tell you what you can do. It is our job to put before you incremental opportunities or new opportunities. So you could add a little more money into a portfolio which you already have curated, and you could scale up some investment decisions which are more attractive than the others and which probably have better potential of future returns from here. Then you could initiate new investments in opportunities which have become more attractive because of this correction. From our side, it's our job to encourage you to do both, and that is something that we would actively do as markets come more and more in our favor. If you are the kind who are very anxious about performance, I have only one simple advice. Hold on. If you would like to see your performance go back to where it was or to a better place which you aspire for, undertake a few investment actions to the extent of between 5 and 10% of your existing portfolio. Add more money to the same portfolio. Take advice as to where you can add money and precisely add small doses of money into those investments. Add new ideas if you can find the next 10% of money. So the first 10% goes to the existing portfolio, the second 10% should probably go towards finding a few new ideas. As the market comes in your favor, these ideas can be bought at even more attractive valuations, and if they perform in the coming quarters, then you are going to see these new ideas give you a higher return and a better prospect of investment performance. So in that sense, there are two things you need to do. Give some money to scale up your existing bets, give some more money to buy new ideas. So that is something which you can do, and when you do that, we can do better and give you a better investment experience because you are going to participate when valuations are coming more and more in your favor. Remember, this loop will have to be done 2 or 3 times. There will be multiple opportunities that come our way, and we would always want you to participate in each of these opportunities. Many people miss the first, second and third opportunity, and then when the market is again bounced back, they come in. This is something that saddens us, and we would like to see you participate better this time because as such, all our investment approaches are aligned towards buying only investments where the valuations are already in our favor. Now assume the market falls, we believe that the valuations will come even more in our favor. So by participating in every correction, you are going to make your portfolio even more stronger, resilient and robust. And when you create more robustness and resilience during a correction, when the markets reverse, you are going to benefit all the more. This is something that we want you to take into account and bring into your investing so that it will be resilient and strong when the markets rebound. We want you to perform well, and we want you to participate more as the markets turn more and more in your favor. Use these opportunities because these opportunities are not going to be there before you all the time. If you missed buying in 2020 in March, April, you will recall that you didn't get those opportunities for nearly 2 years. Here we are once again heading towards a phase where we could find some opportunities worth pursuing, and it is our optimism and hope that you will participate in these opportunities much more than you did in 2020. Thank you very much for all your support, and thank you for watching this video. We do sincerely hope you take all the right actions in this phase of market correction. Thank you.